Thank you very much, everyone, for being there today for this great Digital Accords Summit. I am a really happy executive in residence for France of Taxbit, and today moderating also a great panel about shaping the future of digital asset policy. The goal of our panel will be to explore the latest regulatory development across key jurisdictions so that you understand the global regulatory landscape and the key jurisdictions to focus on in 2025, the critical forces shaping the future direction of the digital asset sector and the implications of shifting regulatory priorities for your business. And for that, I have a panel of really wonderful experts that I will let present themselves. So maybe Matthias, can you start, please?
Good morning, everyone. My name is Matthias Bauer-Langgartner. It's great to be here. I'm head of policy at Chainalysis, a blockchain analytics company.
Sorry for that. So I'm Patrick, Senior Director for EU Strategy and Policy at Circle, the largest regulated issuer of stablecoins in the world, and I mostly spent my time working on our EU strategy, MiCA implementation and expansion over here.
Hi, everyone. I'm Elise Soucie Watts. I'm the Executive Director at Global Digital Finance, a not-for-profit industry association. I spend most of my time doing policy and regulation.
And I'm Peter Kerstens from the Financial Services Department of the European Commission. I have been involved in technological innovation work for the last 10 years. And lately, I act mainly as a therapist for the crypto industry.
You went from father of MiCA to therapist. Yeah.
I wonder what's next.
How much is one session with you?
So you see, we will have a great 1 hour discussion all together. And first, I will start with Elise, because in the first part of the panel will be to draw the state of play of regulation. So Elise, I will start with you. As GDF's mission is to favor the adoption of digital assets and the development of digital finance, you are deeply committed with policymakers all around the world. And during your preparation, you mentioned that in 2025, you have already answered the 10 public consultations, so it's quite a lot. And so this shows the growing extent to which authorities scrutinize markets in crypto assets everywhere. So aside from Europe and the US, because we'll come back to this later, when it comes to dialogue with the industry and regulate digital finance, which jurisdictions have been the most active since now?
Well, and actually, since we had our prep call, it's now 12 consultations, which again, I think really highlights how busy of a year it has been. And actually, it's really interesting that you say this because the FSB are asking the same question. So one of the consultations that closed recently, and I'll start there, was the Financial Stability Board's peer review. And what they're looking at is they're preparing a report for the G20, which will be finalized around October. And they're looking at exactly this question: how are various regions implementing their crypto asset frameworks? And so we also kind of conducted an exercise with our members, and we looked at kind of where are, these various challenges across jurisdictions. Where are, firms finding difficulty in, anything from communicating with regulators to implementing tax requirements to implementing FATF requirements, and kind of what is more challenging, what is more expensive, where are the difficulties lying? And I think that, we'll set, as you say, the kind of EU and US aside for a second, but there have been some really, really interesting developments this year. So, and in kind of the past year as well, because we're only 3 months in, though it feels like so much has already happened in 2025. So I think the first, kind of key region that I would start with is the Middle East. So I think that this is one of my kind of biggest regions to watch at the moment, outside of the US and the EU, because if you look at what's happening in Dubai and Abu Dhabi, they are not only developing their regulatory frameworks and providing the clarity that's needed for firms, but they're also really, really, really keen on growth, which I think will come as no surprise. And I obviously, understand as well. Like, I also used to be a regulator, now kind of therapist for regulation too. And I understand that, there is a balance in regulatory objectives. Not every single one can pursue growth. But I think what's really interesting, if you look at the approach of, for example, VARA and the ADGM, they're really trying to bring firms together. And so if you look at, for example, startups and those that are kind of going through the licensing process, but then also the connectivity that they have within the ecosystem to, for example, VCs and things like that, as well as access to funding. The regulators actually play a role in bringing that ecosystem together. And I think that that is a really, really interesting approach when you think about, this kind of framework implementation, because it's not only about providing that clarity, it's also about providing kind of strategic opportunities for growth. And I think that the Middle East does that really well. They also have completed regulatory frameworks, which, is something that we also don't necessarily see in every jurisdiction. Looking at UK, which is where I currently live. And, we don't have a complete regulatory framework there. We don't have stablecoin regulation. We don't have, a holistic MiCA framework. And there was plenty of time to work on that as MiCA was evolving. And I really do think that the UK should have moved a lot more quickly. That being said, if we turn and look at the UK now, there is a roadmap. The FCA have kind of set out where we are going, and it should be completed by 2026. I know we're coming back to the EU and the US. I mean, I think those jurisdictions will already be complete in their evolution of their frameworks before we get there in the UK. And then lastly, I'll just quickly turn to APAC as well. And I think that, again, people sometimes forget that actually APAC were some of the first to implement regulatory frameworks. When MiCA was still under development, Japan was one of the first to have a regulatory framework. They're now looking at how that needs to evolve for things like stablecoins. Hong Kong also has stablecoin legislation on the table. But, really, I think that people should remember that Asia were some of the first to kind of get these requirements in place and are actually now just in the process of updating what they already had, kind of filling those gaps. And so I think if you think holistically, and I know we'll get into this later about what the focus is for kind of across all jurisdictions, I think one of the most important, though, is stablecoin legislation. And I think it's not just about what happens in your home jurisdiction. I know Patrick will probably agree with this. It's also about that reciprocity, because the whole point of stablecoins is for them to be global, for them to be cross-border. So it's not really good enough to just have a framework in one jurisdiction. You have to think about what that means in relation to other frameworks, how you can have those agreements between regulators as well. And so I think that will be a real focus for the year ahead, even as we get these kind of frameworks set. It'll need to think about, how they interact with one another. And I personally expect that to be something that the global standard setters, FSB, BIS, IOSCO, will look to for a next priority to try to, mitigate the risk of regulatory fragmentation. But happy to go into any of that in more detail. I know that was a lot, so I'll pause there.
That's a great starting point to our discussion. Thank you very much, Elise. And actually, I intentionally put the EU and the US aside from my first question. They are the two elephants in the regulatory room, but not really for the same reason. On the one hand, Europe seems to be top of the class with the most advanced and forerunner regulatory framework for markets in crypto assets, and more to come. And we will come back to this later. And on the other hand, until recently, the US were found guilty not to remove the regulatory uncertainty which prevailed. So until recently, because 2025 could finally change the game. Peter, I am turning to you. Could you please remind us what is the broad landscape of EU regulations applying to markets in crypto assets, and what has been the rationale behind and the role of the European Commission?
Well, the real big aim of MiCA and its affiliated regulation was to onshore crypto activity into the European Union. If European companies, European investors, European consumers want to engage in crypto activity, and we're not encouraging that, we're not discouraging that, we're quite neutral on that. We're not saying, go and buy yourself, knock yourself out, go and buy yourself lots of crypto or stable coins. No. But if people want to do that, we think they should be able to do that in the regulatory sunlight in the European Union. And that's why we created this framework. Because if you don't have this framework like this, people are still going to want to do it. And they're going to do it in gray zones, or they're going to go offshore and gamble their life savings away, or gain some life savings by trading offshore. So that was really the aim. I've received many reactions, although lately not that much anymore, that we were doing the devil's work, we were legitimizing crypto, we shouldn't legitimize this. And to me, yes, look, this is just technology. What's there? It's not illegitimate, it's just a tool. You can do all kinds of things with it, including illegitimate things. But such crypto is actually quite interesting. It's, I think, a next generation of asset classes. So that really was the purpose, to onshore the activity in the EU, not to pursue industrial policy. So the aim was not to get all companies to move and set up in the EU and locate everything in the EU. That was not our aim. It was to make crypto available for European consumers and investors in the European context. And that's what we're still working on now personally, because I've been personally involved in MiCA for an awful long time. So I'm very hopeful that we can move on, not to a MiCA 2, but to something else. In particular, what I would call tokenization of financial assets, which, if that happens, and I think it's only a matter of time for this to happen, this will turn the entire MiCA territory into a sideshow. Because global crypto assets now, with the market route now, what is the total market cap is about 2.8 trillion. For that, I should check it again. It just go up and down. It was at its maximum.
A bit low at the moment in the markets.
So it was at its max, it was 3.6 trillion, 120, 130 billion daily trading volume. But if you compare that to financial assets, which are 100-fold the size, imagine the dynamics you can create in financial markets. And we want, and that's what I'm pushing for, we want part of that action in Europe. Because otherwise, and I'm going to quote someone who's not in the room, is that if we are in Europe not agile and move along with the developments there, we are at risk of becoming a flyover zone here. So we will be very proud. Oh, look, we have the most elaborate regulatory framework, but we have no market. And we'll have to make sure that create a framework that is helpful for companies and helpful for investors to want to trade and transact and operate in the European Union, be that on crypto assets, which are not financial instruments, but also on financial instruments that are turned into crypto assets. And that is what I very much look forward to doing. But there's a very big but. I'm not only a therapist for the crypto industry, I'm also a therapist for regulators and national competent authorities who seem to want to relitigate MiCA. First, they wanted the MiCA 2. That's now died down a bit, luckily. Now they're just sort of starting to challenge the MiCA provisions themselves. And so, well, we should change this and we should change that and we should change this and that. And this takes up an awful lot of our time. So if I'm not at one or the other event talking, which I do a lot, I'm basically fighting back the relitigation of MiCA. Now, between talking everywhere and fighting back the relitigation of MiCA, there's not an awful lot of time left to actually do what we want or should be doing, which is to look at tokenization of financial assets. Because that's really where the power lies. I think that with crypto markets, we haven't seen anything yet. When people start realizing the potential of blockchain as a market infrastructure, then it'll become really very, very interesting. When we proposed MiCA, which was in 2020, we developed it earlier, but when we proposed in 2020, large financial institutions, the household names in finance, did not want to be called dead near anything to do with crypto or blockchain. They did not think MiCA was a good idea. They did not think that our DLT pilot regime, which was for using a blockchain and distributed ledgers in financial market infrastructures, that was a good idea. One of the reasons why the DLT pilot regime isn't working very well is because of the pushback we had at the time. Now, they are lining up in front of our doors to complain about all of the restrictions that sit in the DLT pilot. And that is not good enough and that we want more of it. So the big thing, the household names in finance, I'm not talking about the crypto names, but the big financial institutions, all want to go to tokenized financial assets. And that's what we should be focusing on. Thank you.
Thank you very much, Peter. Patrick, I'm turning to you. White Circle was the first MiCA compliant actor authorized by French authorities last year to issue stablecoins in Europe. So could you please explain what was the rationale behind Circle's move to Europe, and what is your experience feedback nearly 1 year later?
Yeah, happy to. And by the way, there were a number of other like smaller issuers that were already at least at the same time compliant as we were, or even before us. But I would say we were the first major global stablecoin issuer to comply with MiCA rules, and that was long time planned. It wasn't, a short-term decision we took. Circle launched a euro-denominated stablecoin in summer 2022. And essentially, at that point, it was already clear as soon as MiCA is finally adopted and then entering into application, would of course move the entirety of its issuance, of its reserving, etc., over to the EU. And that's what we worked on for, I think, roughly 2 years almost. So we applied for the necessary licenses with the ACPR here in France. We got the e-money license, and we're now, issuing both EURC, our euro stablecoin, which grew quite substantially over the last couple of months, and also USDC, the major, dollar-denominated token, out of the French entity. And so, yeah, it was long time planned. I think it fit super well into the overall broader strategy that we always had, which was, regulation first, onshore it into the regulatory frameworks all around the world. We did that not only here in the EU, but also elsewhere in the UAE, for example, in Japan, in Singapore, and other major markets. And the results a year later are very encouraging, I would say. So just to give you a few examples, the Euro token last year, when we first launched it and issued it under MiCA on 1st of July, I think it was roughly at 30 or 40 million market cap. Today, I just checked early this morning, it's at 160 million. It's still a small base, right, compared to the larger dollar tokens, but it quadrupled over a period of roughly 10 months. And we hope and continue to push it to increase further down the line. And what Peter mentioned is something that we notice as well as a private company. We see the larger financial institutions being more open to discussions, be it for partnering with us as banking partners or like crypto asset services partners, be it for exploring their own solutions in the first place. And now with MiCA, we've seen also banks launching e-money tokens. So I would say, yeah, the first signs are encouraging. More and more e-money issuers are coming into compliance. CASPs are getting their MiCA license. Ultimately, I think it's way too early at this point to say whether it is, an industry business success or not. That's something we'll probably have to weigh in on in maybe 2 to 3 years, and really, look at MiCA. What was the goal? Bringing the activity under the perimeter, building a thriving, innovative crypto market in the EU that for now is relatively small compared to the Asian and US markets. And I think in 2 years, or let's say 1 or 2 years, hopefully we can meet here and look at who are the larger players on the CASP side. What's their business? What are their volumes over here in the EU? Who are the stablecoin issuers? What about Euro stablecoins? And look at all these metrics, because that's what matters at the end of the day, and really make a call on whether this ultimately achieved MiCA's goals or not.
Thank you, Patrick. So regulations, we were talking about MiCA, impact obliged entities, but not only, there are companies helping obliged and the companies to comply with those regulations. So Matthias, blockchain analytics made us enter into a new era. I quote you from our preparation. So could you please elaborate on the impact of the emergence of such innovative tools for policymakers and supervisors? How did it contribute to build the EU regulation as it is today, as well as maybe regulations worldwide too?
Thank you very much. Yeah, I definitely think that blockchain analytics is entering a new era at the moment. Blockchain analytics is already 10 years old, so it's not a new thing, and there's been loads of technical developments under the hood. But when you think about the transactional transparency on blockchains, we started off with tracing funds, pretty much, KYT, transaction monitoring systems. There have been loads of technical developments in that first area, which I call sort of like blockchain analytics 1.0. There's loads of development around demixing transactions, There is interesting development around bridging transactions, which is a method that we see a lot with more sophisticated criminals that essentially try to obfuscate the flow of funds by jumping from one chain to another chain to another chain, which was a lot of manual labor. There's much more automation coming in to do that now, and even a lot of AI driven interfaces with users to make sure that it is much more accessible to get blockchain analytical intelligence. So basically, you put in a crypto asset wallet address, and you don't get a graph and data, but you get really like a short text analyzing the type of exposure that you have. And that's a real benefit of blockchain transactional transparency, that you can give so much more context to a specific transaction. But this is like blockchain 1.0, as I call it. We've actually moved on to blockchain 2.0 already, where we don't just focus on specific transactions and their context to it, which we call the indirect exposure, but we actually look at entities themselves. So we can look at specific entities, their on-chain in and outflows, and really understand relationships between actors on-chain, which is extremely valuable if you think about a regulator that tries to understand the ML exposure of a specific entity, or a CASP that is interacting with another CASP to try to understand how do they deal with sanctions risk, with illicit flows, and it really helps you to get on-chain real-time due diligence, which is amazing, based on data that is not reported by anyone or you need to trust, but it's actual data, it's transactions that really happened. And with essentially taking this a step further to look at assets as well on a holistic level, and really look at assets across multiple blockchains and understand their risk exposure, which is extremely powerful when you think about stablecoin issuers, for example, who can look at all the transactions that happen with their specific asset rather than just transactions that you are part of, as we did in blockchain 1.0 with transaction monitoring. And because of that, blockchain analytics gets much more proactive in this stage in 2.0, because stablecoin issuers like Circle, for example, they can have a really good understanding of who's using the stablecoins, in which contexts are they used, and whenever they deem to be a reason for interfering, for example, using the superpower, freezing funds, they can actually do that. We work a lot with law enforcement agencies, governments, financial intelligence units to make sure that the blockchain ecosystem is much more secure. So we can use that proactively. Even if you are a crypto asset service provider and you think about listing a new asset, you can have a really good understanding of the ML risk and who's using it, who's using the asset. Now, the reason why I say we're in the new era is because we have now moved from investigative tools that look at transactions after the fact into prevention. And I think that's the massive scheme. We've all seen that scams are a massive issue, well, for the broader economy, but also in crypto. So we've taken steps to ensure that we better understand scams, frauds, illicit activity before it actually happens. One of the things that we're doing is we're more and more actively using machine learning, artificial intelligence. We've always used that to cluster addresses to specific entities, but now we've actually used it to analyze behavior on chain, because it gives you a really good understanding of what is likely behind those transactions. It's not ground truth like the rest of our data, so we don't have evidence of that being the case, for example, the payment to darknet market, but based on the transactional activity and how actors behave, it is very likely that it will be payments to a darknet market, giving you a confidence interval. So it really expands the way you look at on-chain transactional activity. But even going a step further, we just purchased 2 different companies who will really accelerate our move into fraud prevention. The first one is around cybersecurity. And cybersecurity in blockchain is extremely closely coupled with prudential requirements, with loss of funds, as we've seen with the Bybit hack, can get so quickly to lose a lot of value. So we have moved into cybersecurity and on-chain real-time threat detection. So essentially, we are checking in real time smart contracts that interact with your platform. A little bit like a KYT tool, transaction monitoring for ML risks. We do the same thing now for cyber threats, analyzing the type of smart contract that tries to interact with you. And if there are any anomalies, if there's something weird, if there are some red flags, then the protocol will just stop the transaction from happening and you have to check again, which is extremely interesting, I think. And the second thing that we're doing is also we are enhancing our data quality around scams and financial infrastructure with AI-powered tools that allow us to essentially extract more financial information of criminal networks in order to prevent payments to those victims. And because of those technical advancements, we see that policymakers who know what is already possible from a technical perspective will also change the way they think about, obligations on firms, for example. So typically, it starts with implementing best practices around ecosystem monitoring, for example, which will then slowly get into, obligations for firms that actually make the ecosystem safer. So I think technical providers like Chainalysis, like custody providers, they're playing a vital part in making this ecosystem much more safe. And on the other hand, also, I think it helps a lot for regulators because they much better understand what is happening on chain. They better understand risk. And this, I think, is extremely important to not create some double standards with financial services, for example, where, you're essentially a bit unsure of how the whole ecosystem works. And if as a regulator you don't really understand the risk that you're trying to mitigate or try to understand, it is really difficult. So you typically go backwards and implement more stricter rules around that industry. And that's I think pretty much what we're seeing in crypto at the moment in Europe.
Thank you, Matthias. And to end the first part of our discussion, I will go back to you, Elise, because thanks to your holistic view, maybe we can better understand. MiCA is maybe the well-known regulation about markets in crypto assets, but what does it mean actually for the rest of the world? Is it an inspiration? Is it a catalyzer? Is it a benchmark? Or to the contrary, are some other regions in the world considering MiCA as a model not to be followed? And are you observing that jurisdictions tend or not to adopt a convergent approach of regulations of digital finance? You gave some first inputs previously, but could you please elaborate?
Very, very happy to. So, actually, I think one thing that I will pick up on first, and not to argue with Peter, because I would never do that. However, you did say something that I thought was really interesting, which was that, first, you're not making a judgment call about crypto assets, which that I think is really good. And I actually think that, in terms of MiCA, more regulators should remember that. Like, regulatory frameworks are not there to make judgment calls for people. They are there, as you say, to have the perimeter, to make sure there's appropriate disclosures, to make sure the transparency is in place, to make sure high standards are being adhered to. But they're not there to make judgment calls on behalf of either firms or the general public. That I completely agree with and think is really good. And in that sense, I do think that MiCA is the kind of benchmark and standard that people should be looking to. However, you also said something interesting, which is that the point was not to get all of the kind of crypto firms into the EU. Now, I get that, and I know that that wasn't necessarily the intention of MiCA. However, technological sovereignty is a real thing that the EU has been pursuing for years. And so in some senses, while not the aim of MiCA, there is an overarching aim of the EU to have tech firms onshore and be EU businesses with an EU base. And to be fair, I think that's completely fair and strategic for growth, and a lot of other companies are doing that too. But I do think that that's something very real that has to be acknowledged in terms of the impact on firms. Like, there are, and this is not specific to crypto assets, there are very specific and strict EU requirements that make sure that you have to have a home base, you have to have personnel, you have to have the capital and funding, and all of that has to be in the EU. And so in that sense, it is a driver to have firms be building their businesses there. And I personally think that that's a good thing for the EU, but it is something that has to be acknowledged. However, because the MiCA framework is the most complete one really that we see in the world, I think that it will have a very real impact in terms of scaling, in terms of, where firms choose to go in the future. And I do think that it is very much influencing other regulatory frameworks as well. On the flip side of that, I will say that I have had some conversations with regulators, and this is not specific to any because there are different approaches, but it depends on if regulators are taking a principles-based approach or a prescriptive approach. And now, EU regulation, for anyone familiar with MiFID, obviously is not necessarily a principles-based regime. That's not how it works. And so for some countries, they actually won't be able to copy MiCA like for like, even if they wanted to, because that's not how their frameworks are designed. So to just give really practical examples, Australia, the UK, these are principles-based regimes. And so while they can take inspiration from MiCA, and I think they absolutely are, they will have to adapt it to how their regulatory standards are set out. And I mean, again, sometimes firms like it, sometimes they don't. There are positives and negatives to principles-based versus prescriptive. With prescriptive, you know exactly what you have to do, as long as, of course, you don't have the regulators kind of pushing back and, as you say, trying to like litigate against MiCA. You should have that clarity in the level 1 and the level 2 text, and then the implementation of the RTSs, the technical standards, that tells you exactly what you need to do. For firms, of course, that means you exactly have to adhere to it. With principles-based regulation, you do get a bit more flexibility. However, that also leaves some legal and regulatory ambiguity where you're not necessarily always sure how you fall. So, I mean, I think overall, to answer your question, Faustine, I think that a lot of countries and jurisdictions are taking inspiration from MiCA, and I think we are seeing that kind of convergence. And in fact, we are seeing that push for convergence from firms. So, I mean, I have responded in some of these consultation responses. Sometimes what we say is, you know, this is actually quite far from MiCA, and this will make it difficult for firms because they're going to have to then comply with 2 sets of requirements. Firms would appreciate it if this was a bit more aligned. Like, that is something very real that we say and push back to regulators who are consulting on other frameworks. So I do think we're seeing that push towards convergence. I know we'll get on to the US later, and I feel like as an American expat, I can say the US kind of likes to do their own thing sometimes, not necessarily helpful. I think it would be great if we could see a bit more convergence between the US and the EU, but if you look at what's being proposed so far, it's not actually that big of a divide. So far, we don't know what the market structure exactly will look like yet, but for stable coins, for example, and I'm sure Patrick could comment on that too, you know, it's not totally misaligned. So yes, I think we are going to see convergence. I think MiCA is a high standard to adhere to. I think, to your point, a lot of jurisdictions want to have that connectivity in with the European market. And so I think because of that, we will see the convergence continue to happen. And I think for the sake of the industry, I really hope that we do.
Thank you, Elise. And actually, let's look at the future now. Because first, in Europe, we can all assume that MiCA is not the end of the story of regulation of markets in crypto assets, maybe unfortunately. To be noticed, there was a pilot regime implemented 2 years ago for a tokenized financial instruments that we discussed a little bit earlier. DORA and TFR2, the travel rule, were already implemented at the same time or nearly as MiCA and must be respected by crypto asset service providers. Though that was in the EU, we nearly all heard about the executive order strengthening American leadership in digital financial technology published in January, which gives guidelines on the work to be conducted in the US in 2025. So lots to come, but let's stay in Europe first. Peter, what are the main priorities of the European Commission now MiCA has been implemented? Can you depict us how MLR, DEC 8, FIDA, PSD3, PSR, CRD, well, lots of acronyms, and so on, will impact crypto asset markets?
Well, although the deadline is passed, most member states still are in a transition period for authorizing crypto asset service providers. Some member states are a bit ahead. They have started licensing. So although we would like to move on, we still have to watch very carefully what's happening, especially because there's a lot of pushback and re-litigation, and you shouldn't underestimate how much of this is going on. And this shows that there is still a very much of an anti or a crypto skeptic attitude among quite a lot of regulators in Europe. And I don't know whether I should go as far, but maybe I will go as far as that, because the Trump administration has come out and being very pro-crypto. This seems to trigger a reaction in Europe that if he says it's a good thing, it therefore must be a bad thing. And so, and we see that a bit in the attitude. And people are often very focused on what the rules say, what the technical standards say, especially lawyers. But much more important than what the rules say is what is the attitude of the regulator and the supervisor. Much more important. And they would, without changing a comma in the text of the law, the world, they can have a completely different world for the business community if their attitude is different. If they are more positive, more engaging, more permissive, enabling, or if they're very restrictive in their attitude. And I see much more restrictive attitude, which does not bode very well for the future of tokenized assets. And if you look at how trading venues operate in traditional equities and that and so on, they don't operate 24/7. They've got opening times, closing times, all kinds of rules. And the way they are operating is micromanaged by the regulators, because we spent years and years trying to sort of change and frame how trading should work, and then markets innovate around that. So we come up with other rules, and now we see crypto developing, or the crypto community ecosystem developing new kinds of trading practices and trading venues. Now, to many observers, that that's just all the same thing, matching sort of order books and buy and sell, selling interest at the same, whether it's equity or debt or crypto, but it's not. There's a different dynamic. For example, crypto assets, service providers, trading venues in particular, typically also are the custodians of the crypto assets, because you can't trade crypto assets if the assets aren't at the venue, which is very different from equity and debt instruments where the securities, they are not at the venue. Securities are in a central security depository. So if you want to go to a next stage, you have to really reframe policy for markets in financial instruments as well. And then the question is, are we going to model these on the way crypto asset markets function, against the current background that, well, if the US administration is in favor, we must be against? Or are we going to say, no, let's regulate them into oblivion, the equity markets in Europe, and debt markets as well. And while we're at it, why don't we just try to apply the same disciplines, regulatory disciplines, onto the MiCA market, onto the crypto markets? So that's what I fear a bit as a trend, but I'm an optimist. And I believe that persistence overcomes resistance. So that's why, and I apologize to people who hear me speaking very often, I sound like a broken record, is that it's going to get better. It may get worse before it gets better, but it's going to get better. And blockchain-enabled financial markets are the future. I have no doubt about it.
Thank you, Peter. So it could be better, maybe. But so, Matthias, Patrick, even if already in place, are MiCA, DORA, TFO2 really crystal clear today? Are you expecting some clarifications, or even are you worrying about some possible negative effects and threats of these regulations?
I can start. So on the stablecoin side, there's certainly still a few things that are pending, part of the level 2 standards and guidelines, for example, as to what constitutes a high quality liquid assets. Those still need to be finalized and published. And plus, separate from those level 2 standards, there are also a few complexities, I think, that haven't necessarily been discussed through during the MiCA negotiations. One example is the fact that an e-money tokens or fiat-backed stablecoin is defined as a crypto asset, but it shall also be deemed to be e-money. And that dual classification now raises the question amongst, the hundreds of casps over here in Europe, whether for EMT transfers, they not only need a MiCA license, but also a separate payment services license on top, which would obviously represent a massive duplication of requirements, which would be a massive hurdle for most of the startups to use those stablecoins, which were supposed to be used, right? They are clearly, and I think everyone agrees on that, the safest type of crypto asset. They are not unbacked. They just, have 100 over-collateralized fiat reserve. And so even if you look at the capital requirements, for example, e-money tokens are by far the safest. And they were supposed to be the assets that everyone uses for transfers and transactions. And so now it's very important that we avoid any duplication, of requirements, of licensing that would be needed for casts in order to really then go and use these tokens for transferring and transacting with other casts or with self-custody wallets and other types of entities. And I think EBA and ESMA are working on, an opinion on that specific topic, on how to thread the needle as to what constitutes a crypto asset transfer and is fully covered as a crypto asset service under MiCA, and what, should be covered under the PSD as well. For example, if I'm going to use a stablecoin for buying a coffee at Starbucks here in Paris, that's likely to be deemed a payment, right? And that will need to be covered under the PSD. If I'm just transferring an EMT from my exchange to my self-custody wallet, that's clearly something that is done in relation to a crypto asset service that I have been used, and I just transfer the custody of it. That's just one example of many, many others where, as Peter also mentioned, there's a ton of follow-up work going on behind the scenes, and that is also why we still have to wait and see how the market will actually look like.
Great.
From my perspective, when I think about MiCA implementation, I think there's still quite a few bits and pieces that we need to do. As Peter said earlier, it's the attitude with which regulation is enforced, which is extremely, extremely important and can actually change how an industry grows or doesn't grow. I think one of the things that we've seen with NCAs and also policymakers to some extent is that a lot of the thinking around crypto assets is still a little bit in the traditional financial services world, the MiFID, the e-money type world. And I think what we need to better understand is actually harnessing the benefits of blockchain, not only for business purposes, but also for supervisory purposes. And it feels like that within the authorities, we still don't have the appropriate resources and the tools in place to actually leverage those. And I think it would help a lot because it will change the attitude towards the whole industry, and I think essentially help the industry to grow much better. One of the examples would be market abuse, for example. MiCA introduces in the Title VI market abuse regime for CASPs, which is novel. We know that most regulators have said that market abuse is a massive issue for them, alongside customer protection, financial stability. And when you see how market abuse seems to be approached at the moment, it's still a little bit of like a traditional financial services thinking, because most regulators actually focus on what happens within centralized institutions, the regulated entities, which is the way you do market abuse today in traditional financial services world. But of course, digital assets, they are inherently global. There is loads of activity that happens off site, so on chain, not in centralized exchanges. And really, while it is important to understand what happens on centralized exchanges, it's also extremely important to understand what happens in, for example, decentralized exchanges, because everything that happens on chain will show you much more interconnectedness of the market. And in reality, when you look at what happens on decentralized exchanges, and we've done some studies around this, using our heuristics, behavioral analytics, trying to understand how big is the potential market abuse in DeFi. Our first estimates are around 2.5 billion last year that are likely to have been involved in wash trading or pump and dump schemes. So it's quite massive. And from our perspective, the most important thing is to make sure that these proceeds of crime essentially are not received by centralized exchanges and in order to be off-ramped into fiat. And that's also the reason why ESMA, for example, in their opinion stated that CASP should really also consider on-chain activity. Obviously, they can't play the police for the whole ecosystem, but at least transactions that the CASP is part of. But how that looks in practice, I think, is still a little bit unclear to both regulated entities, but also regulators. So I think this place will evolve over time.
I also just have one thing to add in terms of the EU landscape, which is that I want more firms to be talking about DORA and thinking about how DORA applies to them and what their operational resilience requirements are, thinking about third-party outsourcing. And, if you think about the Bybit hack, which wasn't actually a Bybit hack, it was a hack of Safe, that is about operational resilience. And that is why it is so critical to have good best practice in place. And to be honest, something like that will happen again. Like, nation state threat actors are not going away anytime soon, unfortunately. But what we can do is be more prepared in the event that that happens next. And so I think it's so important that crypto firms are also thinking about how DORA applies to them and how they can put those practices into place. And I think, people should be talking about it and thinking about it more.
Thank you, Elise. I'm staying with you, but for a matter of time, please be quick. But we wish to go to the US because it's not always easy to navigate in the announcements of President Trump. So can you help us understand what is likely to come out from the executive order on digital finance? And what is the work already being conducted right now in terms of public policy in the US?
Well, I'm not going to tackle all of the executive orders, so I'm just going to set that out right now. I'll try to stick to the ones that are related to crypto and digital assets, and I will try to be very brief as well. I know Alex Wu talked about this a bit yesterday too, so for those who weren't here, that was also a great panel. I think that the key things to think about are, first of all, obviously with, having David Sachs, having these leaders looking at digital assets, having the crypto task force at the SEC as well. You mentioned, regulatory attitude and how much that matters. And this was a huge tone shift for the US. Obviously, the legislation is not there yet. It is still in development. And to your point about how sometimes attitude is actually more important than legislation, the SEC is a really shining example of that. For years, firms were terrified to talk to the SEC. Like, at least, people would go and speak to their regulators in the EU if they wanted to engage in crypto activities. In the US, it was like, I really, really don't want to put my head above the parapet because I'm basically going to get sued or fined. And now there's roundtables, there's discussions, like people at the SEC are putting in a huge amount of work to engage with the market and to prepare. Hugely important. Will be very interesting to see how the legislation develops. There is an ambition to have the next iteration of what Fit 21 will be done by August. I think that that's probably not going to happen. I think that's really, really ambitious. But do I think they'll finish the stablecoin legislation by the summer? Probably. I think that has a really good shot. I think they've got the bipartisan buy-in, got stable and genius. Final version will probably look like mostly genius with a bit of stable mixed in after the reconciliation. But let's see. But I think the stablecoin proposals are, broadly very sensible. And so, yeah, Q1 stablecoins, Q2 market structure, executive orders, it set up the leadership. It also established a strategic Bitcoin reserve, which honestly, I don't have time to get into. But the last word I'll say on that is that, in my opinion, I think that that's a little bit strange because a strategic reserve is for something like oil. So there is a strategic oil reserve in the US. If oil disappeared and the US had no oil tomorrow, things would look drastic and probably close, near apocalyptic, and people would not be able to go anywhere and it would be a disaster. If there was no Bitcoin in the US tomorrow, the world would continue to turn. People would probably be unhappy and some people would lose a lot of money, but the world would continue to turn. And so I think establishing a strategic reserve for something that is not yet a strategic asset, kind of interesting, but let's see how it works out. And that's all I'll say on that. Thanks.
Very clear and being very quick. Thank you very much. I think we have 10 minutes left, or okay, that's it. I had final questions for you because the last part of our panel was to focus actually on the role of both players and policymakers in shaping the policy and shaping the regulation today and tomorrow, because both of you played a substantial role and will do actually at different levels. So for a matter of time, I will ask you to answer all, Elise as an industry body, Patrick as an obliged entity, Matthias as a compliance platform, and Peter as the European Commission. Could you please explain what's your role and what will be the implications of your commitment in the coming years for shaping the regulations of markets in crypto assets?
Right. Okay. Well, I'm going to quote, as I often do, Ronald Reagan. And he said the most dangerous words in the English language are, I'm from the government and I'm here to help. Assuming the European Commission is a bit like government, I am here to help. Now, but think very carefully what my help can do, because once we may want to be very helpful in trying to get you the kind of regulations and frameworks that you need to build whatever it is you want to build. But we can only make a proposal. We do not adopt the rules. This is for the Parliament and the Council. I've been 29 years at the European Commission, and I've seen legislations that were adopted that said the exact opposite of what was actually proposed. So you have to think carefully what you're going to propose, and is there a chance of getting this through in that shape? And how are people going to sort of deal with it? But my call on everyone in the industry is, don't send me your pictures about the wonderful product you have, because I'm not buying stuff. Or people who want to partner with us. So you obviously clearly don't know what the European Commission does. You do not want us as your partner. Like, I can't code. Like, I'm not a builder. But if there is something in our policy or rule book that really prevents you from implementing a wonderful innovation, do come and tell us what it is that is holding you back. Because we want to be helpful in trying to take those barriers away. I repeat this call every time I speak in public. I'm yet to receive a concrete suggestion on what in our rulebook for not MiCA, but traditional financial markets should be changed, either in MiFID, CSDR, collateral directive, or the other wonderful pieces of legislation we have, what it is that should be changed and how it should be changed so that you guys can build the next great invention and innovation, which hopefully will be implemented in Europe, because we're ultimately after Europe first.
Ooh, I don't know how I'm going to follow the Europe first, but I'll be really brief, which is, honestly building on what Peter says, it is really important for people to continue to speak to their regulators. That is pretty much the whole point of what we aim to do, is try to be a bridge between the private sector and the public sector, and to give concrete, technical, helpful feedback. So again, when I think about like what's on my radar for the years to come, it is not going to regulators and just sort of saying, boo the regulation, we don't like it. To Peter's point, if you want something to change, you have to say what you want changed, what you want it changed to, where there should be alignment, and going into the actual specifics of what we mean for that. And so, that will continue to be my focus globally, trying to encourage that harmonization, trying to feed it back. Honestly, I have a lot of conversations with regulators where I say, this is something that worked in this jurisdiction, or this is something that we just fed back in that jurisdiction that really doesn't work. And I think continuing those conversations as well, stopping the gaps, that will be a huge focus, and working with our, great members as well, like Taxbit and firms that have that kind of compliance first attitude and want to help shape the regulatory frameworks, it remains critical. So very excited for the years to come, not from the government, but also here to help.
So on our side, and funnily enough, Circle often finds itself in a position to be some kind of like regulatory guinea pig, because we're, the first ones doing things in a regulated way in major jurisdictions. And that's similar here in the EU. And I think so, as a regulatory first entity and the first major stablecoin to be licensed and also compliant with MiCA, I think we have a completely shared interest with the EU, with the institutions, to making that a success. I would probably highlight three different ways that we're trying to achieve that. So first, work on the outstanding open items and resolve those, and really show also as a major stablecoin issuer that it is possible to comply with MiCA, and that it is helpful, and that it can also grow the business, and it shows up in the numbers. And I think that's key, because if you currently look at stablecoins, right, you open whatever CoinGecko or CoinMarketCap, you look at the ranking by market capitalization, there aren't many stablecoins in the top 30, 40 that are MiCA compliant. And clearly that cannot be the goal of the European Union, to come up with a regulation and then have very few players to actually seek that regulation. So let's make it work. and let's show that it has, a positive business impact as well. So that's point one. Point two, I already touched on it. We're super committed to further growing our euro-denominated stablecoin EURC. Very encouraging numbers recently. We're by far the largest euro stablecoin in circulation, with dominance, by the way, growing. But so that's very important, because ultimately in the European Union, as crypto and TradFi connect for capital market trading, for example, and other real-world payments, the euro will be, the priority and the predominant currency used here in tokenized markets. And then last but not least, that's an item that is, I would say, often overlooked, because every jurisdiction tends to always look inward, right? And you mentioned it earlier. At the end of the day, crypto assets, stablecoins, those are inherently internet native global assets. And they only make sense if they remain inherently internet native, globally accessible, interoperable assets. Otherwise, it doesn't really make sense. I mean, that's their value proposition, a global protocol for money. You can connect to it, you can build apps on it, you can send it across the world for free in a fraction, of time. And so we have to make sure, and we as a globally operating company are very committed to that those jurisdictions align with one another, so that the EU, starts increasingly to talk to the regulators on the US side and in the other major global financial jurisdictions, and make sure that they find a way where we agree, we align on certain standards. It will never be 100% the same, right? It doesn't have to. Exactly. It just needs to be a way that works for the regulators on one side and then the industry, because the worst case scenario for, I think, the entire industry, if we start balkanizing, the crypto markets through national and regional regulation. I think that's an outcome we all have to prevent.
Yeah. Thank you. Yeah, I mean, from our perspective, Chainalysis has got a really interesting position, because we are working both with industry and regulators. And the thing that we are really focusing on at the moment here in Europe is around implementation, better understanding the tools and also the benefits around blockchain analytics and how you can use it to actually create a better system than the old one that we had. And we tried it in multiple ways. One is, like directly interacting with regulators, policymakers. They use our tools, but also we want to foster use cases to show how that actually works in practice, preventing fraud more efficiently, which is on the agenda of many governments, for example. One of those would be Operation Spincaster, where we essentially identified proactively addresses that were poisoned with so-called approval phishing, that essentially allows the attacker to drain wallets of their funds. We looked for it. We found 7,000 addresses that have been affected by that specific scam. We worked with 7 different law enforcement agencies, 17 financial intelligence units, and also stablecoin issuers and exchanges. I think 17 exchanges were involved to essentially prevent that fraud from happening and recoup funds that have been lost as well and seized. And this is an opportunity that is completely unheard of in the fiat world. So one of the focuses really is, this is new technology. It is different to the old one. We've got transactional transparency. We can do much better than we used to. And I think this will also change the attitude towards everything that comes after MiCA. From a policy perspective, I think there's loads of movement in ancillary legislations around new AML rules coming in. There is a lot of focus internationally on stable coins and how we should handle that. And also lots of discussions around DeFi, and luckily nothing around, less around MiCA 2.0, because also from our perspective, it's not probably the best way forward.
Thank you very much. I don't think we have time for questions, so please don't hesitate to reach our panelists around the coffee. Thank you very much for your attention. Thank you very much to our great experts, and have a lovely day.